Give me one sec, guys. All right, so how's it going? I'm gonna do a trade breakdown of a trade I took and called in the chat, and we will show you technicals first, and then I'll show you prime market terminal. A lot of people think that you really, literally just need prime market terminal in order to be profitable. Prime market terminal is an excellent, top grade software, institutional grade software, but without a trading plan and knowledge of the markets, you it still be very hard to kind of navigate the markets. That's all I'm saying. So that being said, um, make sure that if you have prime market terminal, even if you don't, that you have a trading plan built around the data that you use for a prime market terminal. You know what I mean? It's not a kind of get rich quick thing, but you can make good money and good, be able to trade full time. I've seen it from the data from prime market terminal, but you have to be able to actually interpret the data and apply it to the chart, right? You have to have a combination of both, right? So we're gonna start on the 4 hour. So this is my higher time frame reference that I was using. And what first thing I noticed was this bullish trend, GU. It's just been bullish, extremely bullish for quite some time. And you can see to the point where it got today for the trade that I took. I was looking to get into GU longs, as you can see. And the first thing I noticed was that there was a brick of structure to the upside. So at that point, I didn't know that they were going to have a continuation somewhere in this area, just due to the fact that it broke structure to the upside. It came in and it filled this imbalance right here on the H4, which, let me see, was in, technically the imbalance was in discount territory, and then we had a continuation, or it started a continuation from there to the upside, and now we ended up where we are now, right? A part of that continuation, right, was them coming up and essentially creating lower highs and lower lows on the way down, and creating buy side liquidity. Price did come up. You did have a trade above. It took some liquidity here, so it changed character a little bit here. Came down, took some sell side here, and now it was shooting for the buy side, right? At the time that it was shooting for the buy side, seeing that this was the order block, technically speaking, that changed character. So I would consider from here to here, this wick right here, to here, all lower highs, right? I count wicks too, not just like, oh, this is the lower high, this entire thing. Like I count wicks too. So lower high, right? They took the sell side liquidity, and I knew that after that they had to have a continuation into facing buy side. So I was like, okay, bet, where is the buy side? If they had not taken sell side yet, I would be looking for them to take sell side first, and then maybe waiting for some price action, like something like a breaking structure or something like that on the H4. And this trade likely would not have even been ready, according to my own trading plan. But it was actually perfectly ready, right? So you seen price coming down, came from this imbalance and came back up, and then created another lower high. And now we're just going to focus on this area, right? I just like to follow the liquidity, right? That'll tell you exactly what's going to happen next, right? You can't be 100% in the market. You can't predict what's going to happen next with 100% certainty, but like you can be knowledgeable enough to have extremely high probability trades. Let me move this up a little bit. It's actually bothering me. I'm a little OCD. You can have high probability trades based on your knowledge and liquidity, right? With how liquidity works, right? And I just got done back testing on Friday for quite some time. Price came up, basically changed character right here, as in traded above the lower high and created a new high. Once price did that, which was on this candle right here, there was a bullish order block or a demand that was responsible for that. So price came up and then respected that on these wicks right here. You can see the wick right here. I'll actually draw that in real quick. You can see the wick right here where it respected. Let me change the color of that to something more noticeable. You can see the wick right there where it was respected, and also the wicks right here as well. Those are just a few examples of where that was also respected, right? And from there, you had price kind of chasing this last high right here, which I'll mark up as well, right? So overall, right, the big picture is that it was going to break structure up here, and that's kind of what I was looking for, which is what happened today. And I'll actually move this to here and duplicate that real quick. So I was looking for it to break structure right here on this last extreme high, and I knew that they were continuously chasing buy side liquidity to the upside, and they're recently taken sell side. So what I did was I dropped down to the 15-minute, right? Oh, one more thing before I even continue, I'm getting a little ahead of myself, right? We also had, let me move this over a little bit, hit an imbalance. Delete this for now. You had an imbalance between this candle here and this candle here, right? So I'm gonna move this back over now, and I filled that in and drew that in, and I was like, okay, bet. Either one of two scenarios is going to happen based on where liquidity is lying right now and kind of where what institutional footprints I have. Either it's going to come back down and tap this bullish order block or demand. They're the same thing, just different names, honestly. They're gonna come down and tap that and basically take the sell side liquidity on the H4, or they're gonna come in and fill this imbalance and have a continuation. And since they had already been filling the imbalance, honestly, it was a 50-50 split. I could have split my risk and maybe put a sell limit here and also a sell limit here. But I didn't want to do that. I wanted to wait for extra confirmations. This was not a buy limit. This was not a buy limit. This was a market execution. I wanted to wait for extra confirmation just because you had two scenarios that could have played out, right? I go based off scenario. If one scenario, if there's more than one scenario, I wait for extra confirmations, you know what I mean? Based on liquidity and things like that. But and this imbalance at the time was being filled. So dropping down to the 15-minute, and you can see what happened, obviously. Dropping down to the 15-minute, you can see that we are now inside of this. This box right here would be the H4 imbalance that we were referring to, right? I noticed that price kept breaking structure, break structure, came back down, broke structure, and I was just basically drew in where price was respecting after the structure break, and I also drew in the order blocks or demands that were the cause of the breaks of structure, right? So price came up here, nothing special, basically from here to here, kept on creating lower highs all the way to this point right here. And finally, and I'll zoom in a little bit, right? Price actually traded above via this wick right here. Where is my tools? Price actually traded above via this wick right here. And we had a legitimate change of character right here. That's what that would be. I don't know why that changed. It was not that before. We had a legitimate change of character right here. So a change of character is just an unconfirmed reversal in trend, right? Don't just don't just do change of characters because there are fake change of characters. It has to be in context with things like liquidity and structure and things like that, and higher time frame and things like that. Strong highs, stronger lows, but that's for a different video, right? So you had a change of character right here, and there's an unconfirmed bullish reversal at the time. Price came back up, and this is the order block actually that caused change of character. If I pull this over, you can see that all of this was sell side liquidity down to this wick right here, in which I'll also mark up. Down to this wick, it was all sell side liquidity because they came short of the order block at the time that was in discount territory. If I were to draw my discount premium fib, let me move that out of the way. If I were to draw my discount premium fib, kind of right here, this is obviously the order block that was in discount territory, which is what you want to see if you are going for longs, right? So price broke structure again to the upside here, here. So with that said, price broke structure to the upside. They came down, and this is like that area that I did notice price, right? I noticed price was coming down, and they were coming down back into this. Now I wanted to see if they were going to violate this, because if they did violate this demand or bullish order block, I knew they were going to come down into this, and I would have had to wait for more confirmations for the trade, right? Zooming in real quick to the area that we're at now, right? Because we've already explained the rest of this area. The last thing that happened, right, at the time was a structure break, right, to the upside. So I did notice that. I knew that at that time, seeing this structure break to the upside from basically here to here that caused it, I knew that this was going to be liquidity, because there was really no real demands or bullish order blocks that were valid and good except for this one. So I knew they were going to come down and potentially tap into that, right? At the time, and that's kind of when I determined that the H4 imbalance was going to be a thing in continuation. Is when I saw drop down to the 15-minute, and I saw that the last thing that happened at the time was a break of structure to the upside. Okay, bet. That means you're going to have continuation from some type of institutional footprint from inside of this H4 imbalance. Price came down and rejected the area on this bearish candle, and then again on this bullish candle, which was once a bearish candle. They took the sell side, and essentially this change of character happened right here. And the reason why I did a market execution was because I had a lot of context for this, right? The breaking structure to the upside, the higher time frame reference of the imbalance, the fact that it did not violate or trade below this order block right here, the fact that they already took sell side liquidity from this area, so likely they didn't need to keep coming back, and that would qualify this strong low, by the way. So that should not have gotten violated, which it didn't. So that being said, I was like, bet this is an established lower high right here. This 1, 2, 3, 4, these 4 candles right here to me would be an established lower high. If I get a candle trading above that in any regard, I would feel very comfortable doing a market execution from that, right? On top of that, you did see, right? I did see also a 15-minute order block or demand, a bullish order block or demand created as a result of the mitigation of the other demand or bullish order block, right? So I drew that in, and I expected that to be respected given the liquidity and where it was lying, right? There was a bunch of liquidity lying to the upside, right? Buy side liquidity. Once this candle traded above, I called it in my group for a market execution. Price did come back down and retest basically this order block right here pretty nicely. And then basically rejected it back up. We had about a core, I would say about 0.3, 0.45% drawdown, something like that. And then price came back up to break even. So I was like, okay, that's it didn't violate this order block. And if it did, it might have traded below into this. And I would have gotten stopped out for minus 1%, but I just didn't see that happen, seeing as they already took the sell side liquidity from there. And then from there, it created another bullish order block. Or demand, and I did just kind of wait for price to kind of play out. Price did break structure again, drop down. It mitigated this one right here as well. This bullish order block right here as well, and price shot up again, broke structure again to the upside, and just continued that, right? So I did draw in this 15-minute order block right here as well, because this is the one that caused the latest structure break, kind of like on a more minor level. And I expected them to basically buy from there. And I was thinking about calling a second entry right here, because once I get confirmation, it moves well past my entry, and I'm having continuous breaks of structure to the upside, or in my favor, then you can just pick one for a second entry. Oftentimes, they oftentimes you are presented with at least one more opportunity. It wasn't my trading plan to get a second entry, but we had already lost on AUD entity about 0.84%. Kind of cut that early because I knew I lost in that trade, risking 1%. So I didn't want to kind of I wanted to kind of watch the risk basically. You have to be very good at risk management and be a professional risk manager more than a professional trader, and you'll survive long term in these markets, right? I was going to call that, but I wanted to see how it was going to play out. I didn't want to be greedy either. If I did call this, it would have been at just an extra 0.5% or something like that risk. It did end up coming in, tapping that pretty nicely, and then it shot up from there very massively, right? So now that caused, once again, another break of structure. Zooming out, that caused kind of like the bigger picture break of structure. If I were to zoom out all the way, this was kind of like a really big picture break of structure right here that no one, zooming in, you wouldn't have noticed, but like big area where buy side liquidity basically was lying. You could change this to buy side liquidity or break of structure. I did have that being time. I don't know why this keeps changing or not saving buy side liquidity. It did violate that buy side liquidity and take that out and smash my take profit for 76 pips or 4% gain, right? So overall today, we did have 2.6% gain, which, you do some basic math real quick. Look my calculator. Just do some basic math real quick to kind of give you guys a perspective of kind of like a real quick you're not gonna do it. There it is. Kind of give you guys a perspective of what you do need in order to do good numbers trading, right? You need a trading plan, but also for me at least, it helps me to have a daily goal, right? A minimum daily goal, right? I want to have 2.5 to 3% a day. It's not going to, and I understand that it's not going to be like realistic that some days you will, I might have a red day where I might be -1 or -1.5 or -2%, but imagine doing 4 or 6% in a day, you're ahead of the game, right? So you have 2.5% a day. And there's 5 days trading days in a week, right? 12.5% a week, right? So you do that times 4 weeks trading weeks in a month, and that's 50% a month. Now I know once again that's not realistic to hit 50% a month, literally every month. You'd be the richest guy in the world, but with compounding interest. But it's just a very good small minor goal to have for a daily target, and it's big enough, as you can see, that you can it's a very achievable goal on a daily basis. Oh, why are you refreshing? It's a very achievable goal on a daily basis, 2.5 to 3% a day. And if you think long term, which most people do not, in 30 days you can have maybe 30 or 25 or maybe even 15 or 20%. But like on a great day, if you hit 2.5% gain most days and you're good and your trading plan works, and let's just say it's 75% accurate, 80% accurate, whatever the case may be overall long term, and it balances out after losses and things like that, you can do pretty good for yourself if you can do 2.5% a day. You can pass funding challenges pretty easily. You can, I mean, it's not very hard, honestly, once you kind of have structure in your trading, right? So that did have a very massive spike for to take profit. I'm almost positive that was news because today there was I believe it was Government Bailey was speaking today, and I did expect that to be hawkish talks, bullish talks. My bad. Let's go to economic calendar real quick. I had some euro pairs in mind, but I did not want to trade them due to the news that was going to be present today. So yeah, all these came out. We had two Great British Pound reports that came out as negative. And you had employment change, which was a medium impact one that was positive. You had another employment change. You had the employment change 3-month MOM for October. You had unemployment change. That was a neutral one. It stayed the same. Neutral for the euro. Positive for the euro, high impact. Positive for the euro, medium impact. And then you had the Bank of England financial stability report, but most importantly today you had Governor Bank of England Bailey speaking today, and that is what likely caused the volatile spike. Right, you have some NZD news and some JPY news, but I don't trade JPY pairs at all. I do trade NZD pairs, but that caused a volatile spike. I do believe that overall long term that GBPUSD will have some downside risk, but also on the other end of the spectrum, there is USD downside risk as well. So as long as Great Britain can kind of keep up some type of positivity in their economy, and the US dollar will for now be bullish, but in my opinion, currently for now it'll be bullish based on kind of fundamentals, things like that. But long term, I think it will be bearish. Moving on to the prime market terminal data. You did have 66% of retailers being short, as well as bullish predicted candles, which is a pretty textbook trade, to be honest. And they're net positive currently on the Great British Pound. So that made this trade pretty easy. And then for today, right, the currency strength, we have the Great British Pound in red and the USD in kind of like a yellowy orange right there. It's doing significantly better today than the US dollar, right? So I had some confluence also with this trade in terms of data. And let's go kind of like long term. Let's do a 7-day real quick, and then we will cut it there. So with that being said, I don't know why it won't show me the setting real quick for that. Here it is. 7-day. Let's see what the 7-day looks like for currency strength. I do use that if the Great British Pound is doing better long term. I look at the 7-day, 14 to 30, all of that. You can see that the Great British Pound overall currently, the red is a little bit above the yellowish orange, whatever you want to call it. And even in the last week, the Great British Pound has been doing better, and the USD is declining in terms of currency strength. So I had some confluence there. I'm gonna change that back to daily because I like to, when I'm intraday trading, I like to look at it on a daily basis. So, that being said, guys, I will see you guys in the next video. If you got value out of this, go ahead and drop a like and subscribe. If you didn't get any value out of this, I guess watch the video and don't do anything. But that was my breakdown for GBPUSD, or 4% gain overall, 6% today.